That's why I'm looking for a possible break above that price, because this volume could very easily turn out to be bullish volume if the market manages to break through. Okay? So, I'm not waffling here. This is just trading, folks. The opinion right now is that it's bearish because there's no follow through, but hey, you know what? If this market follows through, then it's going to be bullish, and I think we can get a move up here of about 100 pips up here into the top end of this range. I got these two areas. There were several highs over here. The market reacted to that level right there, and then of course you've got the market reacting here, here, and here. That's why I picked those two areas. Also, you can see they're near to the top and bottom end of this overall resistance zone. It's just that the resistance is being concentrated, I feel, along this line and along that line, which is why I targeted those two areas in particular. One thing to be aware of as well is that the Fibonacci levels, I know I haven't talked about these as much as probably I could, but the move down and then back up, here's the 618 level. The 786 level is at 441. The 786 level here is going to be the momentum point. If the market can break above this 786 level, more than likely it's going to reach this prior high at 657 or beyond. Remember, the high, 27 or 28 years ago, was up here almost at 800. So keep those in mind. This could be a trade which winds up really going the distance. So you might want to be prepared for that as well. If you are leaving a portion of the position on, leaving it on for the run-up might be a good idea, because if price does manage to break out, more than likely we're going to get above here. But certainly if price gets above 441, I'm going to be looking for a price to come back up here to 657 in more of a trending fashion. What I was talking about on the phone today was actually a little bit of an insight into me personally. I came into the market today and I was feeling like I needed to trade, and what happened was I was looking at the market. It had come up to resistance, and it looked like it was starting to come down. In fact, it just so happened that when I was looking at it, let's see, when was that? September. Actually, it was right in here. As the market was breaking down through this support level, I was thinking, man, I got to go short. Well, what happened was I realized that what I was feeling was a number of days have gone by. I haven't taken any trades. There haven't been any setups, but price has gone from 96.40 over here all the way up to 331. Okay, so I started thinking to myself, man, I am missing out on a lot of opportunity. But what happened was, what I described to Joe, who I was on the phone with, was that my circuit breakers kicked in. And this is one of the things we're going to talk about at the live event, is how to install circuit breakers in your own thinking so that you can detect these hidden psychological errors. Because I could have easily gone short here and gotten stopped out for a break even or a scratch, meaning a break even rather, or a small loss, which wouldn't have been a big impact to my account, but it would have been a big impact psychologically speaking. Okay, so you just have to remember that even though the market is moving up, like we've seen here over the last several days, even a couple of weeks, is that there may not have been opportunity.